What's up, everybody? Nate here. And in case you missed it, President Joe Biden just a few weeks ago announced that his administration and the federal government would be canceling around $10,000 in federal student loans for every single American that has one. Now, since that has gone out, there has been a lot of confusion over what that actually means. Some people have been saying that this is going to mean an increase in taxes for every single American, meaning every single person in the country is going to pay for it, and this is also going to mean that inflation, which is already running at an over 40-year high in the US, will only go up. So today I want to clear up any confusion on what's actually going on here and what all of this means. Not only that, I want to go over what exactly this is going to cost and who is going to pay for all of these federal student loans that are being canceled. All right, so the first thing you need to understand is where exactly all of this money is going to. Colleges and universities are the ones that initially got paid when people took these loans out. Now that the colleges and universities got paid, though, it's up to the students to repay all of this debt. When the students repay this debt, that goes directly back into the federal government, and the federal government then uses this money to give out to other programs and to give out more student loans. Of course, there's an interest rate that comes with all of these loans, so whoever collects the loan debt now gets to take that interest rate money and grow their entity. In this case, it would be the United States federal government and, of course, just the United States economy. The federal government is going to take this money and it's going to pump it back into the economy in one way or another, whether it's a bill or a federally funded program. So what this would essentially mean when we say forgiven is that these millions of loan borrowers who took out student loans are no longer going to have to pay that debt. So who exactly has to pay the debt now? Well, initially the federal government is going to have to take on all of these costs, right? Because they actually took out the loan. It was their money to begin with. They now have all of these additional costs that they have to take on. According to some reports, this is going to add around $500 billion to $1 trillion to our federal deficit. Now, the deficit is something really interesting, and what it essentially means is that the government is spending money, the government is printing money, and it's spending and sending all of that money throughout our entire economy. But to have a deficit, it's not taxing that much money back in. Right now, the United States government has around $30 trillion, yes, trillion dollars in debt. And that is what our federal deficit is. We're not getting $30 trillion in tax revenue, so we have all of this money that we're spending and printing, but we're not getting enough money in revenue back. So what does the deficit actually mean? Well, the government needs to get its money from somewhere. Remember, governments are nonprofits, so they don't really have a product or something to sell people. The only way that they can get money is through taxes. If they don't get enough taxes, though, well, then they're going to have to print that money. And this is why we've seen inflation go up every single year, is because the United States federal government prints more and more money every year in order to grow our economy. Essentially, a deficit is just the United States government putting all of that money back out into our economy. Now, when we talk about the debt and the federal deficit, a lot of people consider this a really bad thing, and there's been a lot of debate recently over whether the United States government can continue to function in the future if it has nearly $30 trillion in overall debt. Now, what you need to understand about debt, though, is debt is not always really a bad thing. The United States government is effectively growing our economy every single time it prints a dollar. Think about where that money goes. That money goes into people's paychecks, it goes into businesses, it goes into banks, all so we can have more money circulating throughout our economy. And the government is not a company, the government is not a person, the government is a currency producer. It creates how much money it needs in order to function. So in theory, it could always just keep printing more and more money in order to stabilize our entire economy. The problem with this, though, comes down to value and inflation. Obviously, the United States government can't just print money forever, because if it printed money forever, well, then everybody in the entire world would have US dollars. And how valuable would US dollars be if every single person had a ton of them? Well, the fact of the matter is they wouldn't be that valuable at all. And that means you would just need more US dollars to buy all of the same things, because everybody has a ton of US dollars. But when this is controlled by the Federal Reserve and the federal government, they actually really like this. No, seriously, the Federal Reserve and the federal government want to have inflation in our economy, and they want to have a lot of debt. Listen, when you have a lot of debt, you're using that money to build businesses and print even more money, so that way you can grow your economy even faster. More people have jobs, there's more innovation, there's more business interest. All of this grows when you have more money. And what you're thinking is, well, Nate, what you just said means that the value of all dollars goes down as the federal government prints more. Yes, but so does the value of the United States debt. The US, because it is the reserve currency of the world, is able to pay all of its debts off in, of course, US dollars. The value of every dollar goes down the more money that you print, and that means that the United States debt gets a lot cheaper to pay off every single time the US government prints money. So when you see that federal deficit go up, it's not really a good thing, but it's not really a bad thing either, because it means our economy is expanding and we need a lot more money in order to grow. And all of this added inflation means that the US can now pay off all of this debt a whole lot easier. So, I mean, in theory, the United States government doesn't technically have to raise taxes or print any sort of extra money in order to pay off all of this federal student loan debt. It can just eat the cost, and then it's just added to its debt that it can start paying down later. Of course, this can be a huge problem the more debt the US government takes on. I mean, you can't just print money forever, and this is sort of the balance that we've been looking at over the last 20 or 30 years in the US. A lot of money has been printed, and the question is, how long can you do this for before your entire country essentially collapses? And that's why you have a controlled inflation rate from the Federal Reserve. They normally like to keep inflation around 1 to 3%. That means they're paying off their debt, they're printing a lot of money, and inflation is going up, but everything else in the economy adjusts. People make more money, loans cost more, everything essentially goes up. The same exact principle applies to other forms of debt in the United States. Like if you right now take out a 30-year fixed mortgage, well, that means the interest rate on your mortgage is going to be fixed, so you're not going to pay any additional amount in interest or your principal at all. Your mortgage payment is going to be exactly the same. Sure, you might have taxes and insurance that go up every single year, but your actual mortgage is going to be the exact same for the lifetime of that entire mortgage. Let's say in 2022 you pay around $800 on your mortgage. Now that might seem like a lot, but 20 and 30 years from now, the buying power of that $800 might be double. So you might need $1,600 in order to buy what $800 can get you today. So the dollars that you use to pay off your mortgage are getting cheaper every single month. And the United States government uses this exact same strategy to pay off its debt as well. But like I said, the United States government can't just print all of this money, because if it just wanted to print $30 trillion and get itself out of debt, well, that would effectively mean that the US dollar is useless and it would not be the reserve currency of the world, because the US would crumble and it would just have to keep printing more and more money beyond that. You would have hyperinflation, and we've seen in the past that this is a serious problem. So the US government does try to bring in more and more tax revenue every single year in order to kind of offset some of the cost of its debt. One thing that's been floating around right now is the taxes people will have to pay with their federal student loan forgiveness. Some states have actually said that if you get federal student loan forgiveness, then you are going to have to increase your income for how much you actually get forgiven. So essentially, if you get $10,000 or more forgiven in federal student loan debt, then you're going to have to add that $10,000 onto your yearly income, and you'll have to pay taxes on it. And this isn't just theoretical either. Indiana, Mississippi, North Carolina, and California have all talked about taxing this federal student loan forgiveness. The federal government itself has come out and said that you won't have to pay federal student loan taxes because of a bill that passed all the way back in 2003, but some states are saying that because you live in that state, well, the federal law doesn't apply here and you're going to have to pay state income taxes. Now, these states that are saying that you're going to have to pay additional taxes, well, they're going to get billions of dollars in tax revenue from this, but that also means that individuals are going to lose a ton of money in their tax returns this year. And this could mean that their income actually goes up, so they're bumped up into a new tax bracket, and that means that they're going to have to pay more on their income and get a smaller refund. Now, I will say for most Americans, this is going to even itself out, because if you're now saving around $100 to $300 on your student loans, well, that's probably all just going to go back to those state governments. So you're just going to have to pay that additional money to them, even though you're saving it from your student loans. That's the most interesting route, because it means that not everybody in the United States is paying for these forgiven student loans. It's actually falling on the individuals because they now have to pay more in their taxes. But that is not the case across the entire nation. inflation. And what this is going to mean is that as the deficit goes up, well, the government wants to try to recoup some of those losses as much as it can. So it's going to find creative ways in order to tax corporations or the American public in order to get some of that money back. The Biden administration has announced that over the next 10 years or so, the IRS is going to add 87,000 new employees to find tax evaders and to really get through all of these backlogs that we have in tax refunds. But it could also mean that the tax code in the United States changes, so businesses may have to pay a lot more in taxes. Americans may get taxed on their income more or on their property more. And that all feeds into inflation too, because right now in the United States, inflation is around 8.5%. That is extremely elevated, and it means that businesses have to pay their people a lot more because people need to make more money in order to buy all of the same things that they were before. So as people make more money, they're just going to pay a lot more in income taxes. And if they get big raises and taxes go up, then that means even more money for the federal government, and they're able to pay off a lot of that student loan debt themselves. That's one way that the United States government can kind of recoup some of these losses from the taxes standpoint. So that would be revenue for the United States government. But the United States government has another option. They could actually reduce spending in order to recoup these losses. If they were to reduce the amount that they spend, then their debt really wouldn't go up, and they would be able to recalibrate how much they're spending in other areas, and they could put that towards the federal student loan deficit. But that also means that a lot of tax credits, whether it's from the infrastructure program or the Inflation Reduction Act, are going to have to get cut in the future because the United States government simply can't afford them. Not only that, but some pre-existing programs like Social Security are going to have to change so that way they can have more money for student loans. And just simply a lot of other federally funded programs are going to have to lose some of their revenue because we're recouping the losses from student loan debt. I think what we're going to see is a combination of the two. I definitely think we're going to see taxes go up in the United States because they pretty much always do. And I think that we're going to see some federally funded programs get cut in budget sometime in the future. Either way though, the government is kind of making out here because in the short term, it means that inflation is probably going to go up in two ways. The government is going to have to take on these costs, so it either has to reduce its spending, or it has to print a whole bunch of money, or it has to increase taxes. In addition, you might see a little bit more spending from Americans because now they have about $100 to $300 extra in their budget. It's not going to be massive across the board by no means, but you're going to see a little bit more buying power in Americans' wallets. Remember, this money is going to get taxed again when they buy things through the sales tax, so the state government and the federal government is once again going to get paid here. And Americans, as they make more money, are just going to get taxed more, so any money that they would have saved from this forgiveness is essentially just wiped out. All in all, this really doesn't have too many profound effects on our economy at all, and who actually really pays for this is going to depend on which direction state governments and our federal government goes in. I also don't think the cost is going to be that huge for all Americans, but I also don't think that the benefits are that big either. All in all, it really just means that inflation is going to go up and the United States debt is also going to rise. But in the short term, that shouldn't really have too many problems, but in the long term, that could really mean a lot of issues. But now I want to hear from you on this issue. What do you think about federal student loans being forgiven by President Joe Biden and his administration? Do you think this is going to have profound negative effects on our economy, or do you think that we're actually going to see benefits throughout our entire country? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.